Welcome, everyone. Thank you very much for taking your time out on a lovely Friday to have a chat with us today. We're going to be having a great presentation from the gentleman from Freedom Care Group Holdings. Going to learn a bit more about NDIS and how this company is generating quite a bit of cash at the moment. So it's looking pretty interesting to hear a bit more. We're joined by, obviously, the CEO and Managing Director, Jamal Sabsabi, the non-executive chairman, Zoran Grujic,
Grujic.
and Director of Accommodation, Walid Jamal-Eddine. So, gentlemen, thank you so much. I understand we've got a few questions that a few people have emailed through previously. We'll get through to them at the end. For any of the investors that are joining us today, my name's Lachlan Callahan, Share Advisor at Sharewise. Any questions that we do have during the webinar, we'll save 10 minutes for the very end for us to answer for us. But at the moment, Jamal, for yourself, what really got you started on this venture for Freedom Care Group?
Thanks, Lachlan, and welcome everybody. Thank you for giving us some of your time on Friday afternoon for this webinar. But it honestly started by accident. I was actually retired for 4 years, Lachlan, and a friend of mine who's an allied health practitioner came over wanting some managerial help with his podiatry business, and reluctantly I agreed to join him in that venture. And having a very strong work ethic, it's either I do something at 0 or at 100 miles an hour. I of course started doing things at 100 miles an hour, and we were getting this little business nicely off the ground, and NDIS was flourishing and getting traction within the disability support sector. So we decided to register, and the rest is history.
Yeah, very interesting. It seems like you can't keep a good man down. Is that the case?
I don't know about the good man. We definitely haven't got this one down.
Very good, very good. Well, I understand we guys are going to be presenting at the moment. We'll let you guys just get into presentation. We'll answer those questions at the end.
Fantastic. And we've got a lovely story with Freedom Care Group, and our holding company is Freedom Care Holdings, which has the ticker symbol on the Australian Securities Exchange of FCG. We are a premier disability support and healthcare service provider, and our aim is to be a nationwide company providing supports in every state and territory in Australia. Currently, we are present in New South Wales, Victoria, and South Australia, but our ambition is a big one. On the 30th of November, Lachlan, we actually listed on the Securities Exchange. And the management team between myself and Walid and Ahmed, which is the third largest shareholder and founding member, between us, we have 50 years or over 50 years experience in the disability and allied health space. So we bring a lot of clinical expertise to the delivery of the disability support services that we do, which is what is making us stand out in comparison to the average NDIS provider that is out there providing services. We registered under the National Disability Insurance Scheme, which is the NDIS, and our goal is to provide a best-in-class support service to Australians living with a disability. And the sector is growing rapidly, and we've been able to take advantage of that rapid growth and grow within that space. And one of the key factors to our foundation is the values that we've set for ourselves in order to build the company and practice the values that we've set for ourselves in order to deliver services with really strong values. And if we can go to the next slide, our values include respecting integrity, compassion, empathy, innovation, and excellence. And these, we have a full definition of those words on the website for whoever would like to read some more. But whenever we engage amongst ourselves in the workplace, with our participants, with the stakeholders, or anybody that deals with us, these are the values that we present ourselves with. And that has led us into a really good space where we've got ourselves a really good standing within the stakeholders and referrers. There is a lot of trust within this sector. People refer to you when they truly understand and are convinced you are there to deliver the best service that you can for the participant.
Absolutely, absolutely.
So our specialty, we have specialised in the disability support services, and that includes home and community participation, accommodation, allied health, and other services such as plan management and day program. Now, home and community these might all be foreign words to most of our listeners, but home and community participation is where we provide support workers to go to the aid and support of a participant, a client that has disability, to help them within their home environment, or to help them access the community to attend family events, medical appointments, and the like. In the accommodation space, this is where we actually provide homes where those participants live there on a permanent basis, and we supply workers to support them 24/7. And that's actually quite a strong revenue stream within our company.
Absolutely, yeah.
The next one is the allied health, and that's where we provide practitioners such as occupational therapists, speech pathologists, physiotherapists, psychologists, support coordinators, behaviour support practitioners, etc., in order to deliver services to the participants, the people with disability. And we charge, of course, a fee for that. And the other services include plan management and a day program. And a day program is literally like a childcare centre for people with disability. That's where they go and engage in capacity building and activities. So through a combination of excellence in our service, our attitude to best practice, compliance, systems and infrastructure, that has led to our rapid growth. And our growth literally started from zero, and over the past 3 to 3.5 years, we've got to the consolidated position that we are at the moment, which Zoran will go through in a dollar term in a little while. We have a very robust growth plan to see us through to June 2027. That's the horizon that's in front of us at the moment. That's where we've set our goals. And that incorporates organic growth and growth through acquisitions. Prior to the listing and up until now, we don't have any acquisitions or mergers. We have purely grown organically from day one to where we are currently. And our vision is to grow through acquisition as well as organic growth. Being the first NDIS listed company, it gives Freedom Care Group visibility, and it provides the opportunity and the optionality for potential acquisitions. These targeted acquisitions, we need to look at them and need them to be in a positive cash flow generating positions for us to consider them, and that will drive long-term shareholder value for us down the track. From the perspective of what we actually do, the next slide, which is slide 5, can we go up just one, please, Zoran? That's it. These are the services that we provide within Freedom Care Group. There's home and community participation, supported independent living, short-term accommodation, and independent living options. This home and community participation is where we actually, like we said before, send support workers into people's homes in order to provide the services that they need. With supported independent living, these are homes that we actually run ourselves, and people with disability, these are people with disability with higher needs. They actually live in those in those accommodation properties, and we provide services for them 24/7. The next component is the allied health, and there's a list of all the allied health practitioners that we have. Currently, we're up to 93 practitioners on our team.
Wow.
And the other services that we provide are support coordination, behavior support practitioners, plan management, and the day program. And the way our revenue is divided in the accommodation space, and Walid will delve into that into greater details. I think we're up to about close to 100 properties. It's somewhere between 90 and 100 properties at the moment that we run, where people with disability live with us 24/7. That accommodation department generates 55% of Freedom Care Group's revenue. Home and community participation generates 20% of our revenue. Allied health generates 20%, and the others, which include plan management day program, generates 5% of our revenue. And I'll hand it over to Walid to go through the next part of the presentation.
Beautiful.
Thanks, Jamal. Thanks, Lachlan. Thank you all listeners. So pretty much Freedom's competitive advantage, really, through a market that could be quite volatile at times. There's a lot of providers trying to enter into the market, and a lot of providers leaving the market, the commission, coming down a lot harder. So everyone's seeing all that in the media. But I think the reason why we've managed to sort of flourish there, myself and Jamal both have sort of a chiropractic background. I was a chiropractor for 10 years before doing this. Jamal's a chiropractor for 37, 38 odd years before doing this. So we do come from a clinical background, and the third co-founder also comes from a sort of medical center management background. So, management and clinical governance expertise, I think, has allowed us to really work through the industry quite well. A lot of recruitment and training early on was quite heavily involved around the governance and compliance, as well as the complex pathways, which you'll sort of see and hear a little bit of. It's not something that is, making mainstream news or media, per se, but it is really where the higher level of the NDIS space actually, revolves around. So you've got high-level meetings going on, high-level engagement between, police, ambulance, healthcare, psychologists, GPs. At any given time, we could have one meeting that involves about 25 different people linked to a particular person's case that could be quite high profile. So, the recruitment and training around, these things going on and what we need to do and how we need to behave and act in those settings became quite important early on.
Yep.
My specialty and what I've just done, basically part of Freedom Care Group for the last couple of years, has been really just looking at the accommodation, what systems, what policies, procedures, training, we need to put forward. It is a high-risk setting in many cases, and we can have participants from all walks of life. In our current sort of accommodations, we tailor for participants from the age of 18 up until where the cutoff of NDIS is, which is 65. So all of our participants will fit into that age bracket. There is another sort of space or a sector where they do house participants that are under the age of 18 long term, but it is a bit of a different scope. So Freedom Care Group predominantly houses 18 to 65-year-old participants. Again, I would say 60 to 70% of the participants we look after fall into the psychosocial sort of neurodiverse background. That means, they've got complex behaviors happening in the background. They've got complex diagnoses. Usually there's many diagnoses, a lot of medication involved, a lot of robust planning, especially through the discharge process or release from custody. So, as you go on and you work in that space, you'll find that there's a lot of catching up and a lot of brushing up on a lot of skill sets, and each participant comes with their own care needs. So it becomes quite obvious again quite quickly that you have to have this sort of cogwheel always turning in terms of staff training and development and education around different needs. I think we're quite lucky. It is a bit of a scalable industry to be involved in, and I know everyone's question is always going to come back to around the budget and what the budget's doing and where we're going in terms of the political side. But at the end of the day, the participants themselves, once anybody actually sees the care needs level involved, how robust that delivery of service needs to be when it's actually done well.
Yep.
It quite quickly sort of deflates a lot of those concerns going in the background. Yes, it's something that needs to be addressed and looked at in terms of people, using the scheme for things that it's not meant to be used for. But I think if you're doing the right thing and you're doing your best in terms of clinical governance, you really don't have much to worry about on that front. Again, we come from an allied health background, so we understand the clinical side, developing rapport with participants, with stakeholders. So that really gave us a bit of an advantage there as well as the network, getting into the space to start off with. So we grew quite quickly there. And keep in mind, we sort of got Freedom Care Group off the ground, sort of early or back end of 2020, 2021, and that was only doing, $1.5 million odd in turnover. So, a lot of that turnover has happened over the last 2.5, 3 years, and we're quite grateful for the network of people we've really met along the way.
Yep.
And I think the final piece there that gave the competitive advantage again is being sort of just quality in terms of the engagement, very open and understanding and having some flexibility around, how we deliver this service, what it is they need. Sometimes you can't box people exactly into the way, the plan has put them in, and it might be an open type of plan where, some things can be used flexible. A lot of providers, wouldn't bite the bullet and lose some money, in the sense that you're trying to support the participant really to capacity build and understand what their actual needs are. It's quite common participants will come out with plans that may be suitable or may not be suitable purely because NDIS doesn't have information or data about what their needs are. So, it's quite important that it's a long-term sort of vision and a process there happening in the background. So they're all the things, that have helped us, I think, in the competitive advantage space. Some of the investment highlights, we started this again. Listing happened, 30th of November last year. So I think a lot of the things we put forward were the fact that there's high quality revenue going on. So, 95% of that revenue, and, that's probably going to creep up as time goes on as well to predominantly all government-based revenue. We'd probably say, 95% of that is now NDIS-based revenue. Some of our allied health staff also do Medicare-based work and a little bit of private work, but predominantly NDIS-based work at the moment. The business is quite low capital intensive. You do have to take on homes. As Jamal's mentioning, we're creeping on 92 homes now. And, those homes need to be set up. You need to have bonds in place. You need to have a whole stack of things going on. Sometimes some mods that have to happen before a participant can move in. So there is some capital to that, as well as obviously, the usual hiring and management and a little bit of the marketing in the background. But all in all, it's quite a low capital intensive business. Again, the recurring revenue, majority of our participants will remain with us at least for a few years, 70 and 80% at most of the time. There are, the occasions, unfortunately, where participants pass away, or they may be traveling elsewhere, or they may just decide to leave the service because at the time it may not be the right fit for them. But, majority of that revenue is quite recurring year on year. NDIS plans are going anywhere from 1 year up to 3, 4, 5 years sometimes. And that's another way the NDIS Commission is looking at, keeping an eye on things. If somebody's plan is quite solid and year on year it's been quite the same, they're choosing to just extend that period to reduce a lot of the ongoing reports, assessments and all the bits and pieces that cost money just to keep it going for a year. So that's another little strategy they've implemented. Again, experience management. Jamal himself has been a good mentor, I think, to most of us. He's done this, a few times now, where built smaller businesses into something quite scalable. And I think his management expertise has really been, critical to this expansion and growth. I think, again, a lot of the organic growth has been purely around the quality delivery of service and engagement. A lot of service providers and referral sources have experienced some things in the industry that they're probably not very keen on supporting and having as part of their referral network.
Yep.
So it's not uncommon that you may have one referral that comes across, and then within a short space of time, you'll see a few also trickle along, or some people they may know in the network will trickle along with some referrals. It is that type of, very quality based and almost like a one-to-one type of delivery of service. People see it all and hear it all. And, thankfully, we're the first supports provider to jump onto the ASX. So that was exciting. A ton of work there in the background, but that's all right. We're game. And I think the number one thing for a lot of investors as well is the ESG component. I mean, you're doing something that's quite rewarding, for the community, the environment as well. And I think just the social impact long term, the fact that, we've got many of our participants have been in positions or situations where, there's been no support network. They don't have family. They don't have friends that can look after them. I think the worst one we had was somebody had been living almost as a squatter, really, with a family they don't know, but they just happened to just provide a room for him.
Wow.
He had complex needs. He had amputations to toes. He had diabetes through the roof, a whole bunch of things, and he wasn't even on the NDIS. Very illegible. So we've managed to support that participant to move into one of the group homes, get the care they need, and then start to build some capacity. I mean, there was mentioned there in his case, almost for a few months, he was living off just simple noodles packets for a couple of months because he couldn't afford anything else. So there are those challenges that come across, but definitely has a massive social impact. And we're proud of that. Where we are now, I think that's always good to know. We started off with probably $1.5 million, $2 million worth of revenue combined, 2021 really, and over that space of time, we've managed to grow it to circa 30. And they're predominantly the areas we provide service. The easiest way to expand for us has been obviously in the accommodation space, because you feel like that builds a lot of hours. You build quite quickly a support network and some staffing body in that area, and that's been a catalyst there. So Sydney and Wollongong were predominantly our initial areas we started off, but then we've outreached towards Bathurst, Orange, Dubbo, Central, Far West, Wagga, Tamworth, Melbourne, and around the CBD and some surrounding suburbs, and then also into Adelaide. And that's been quite a healthy growth, and we've been in most of those now for a while. And if we just sort of have a look at the revenue breakdown, again, as we mentioned earlier, a lot of the things we do, we track in hours. I guess that's how we deliver our service, and that's the metric we use to track our performance. So we're delivering circa 760 weekly hours of service, and the different departments breakdown would look, accommodation, again, always the dominant one there. We could have a participant move into the accommodation and that number goes up by 168 hours, because that's how many hours we've got in a week. They'll need direct one-on-one support, so that's probably the quickest to grow.
Yep.
It'll always be the biggest department. So just under 5,000 hours a week there. 16.5 million revenue. HCP, which is in-home and community, so doing some work either in participants' homes or taking them out. So they've got nothing to do with our accommodation. 1,750 there hours a week, and 6 mil circa revenue. Allied Health, which is growing quite fast, like Jamal's mentioned. We've had awesome growth in that space over the last year. We're up to 670 hours equivalent there, and that's probably one of the toughest ones, because you could only have a small trickle of of referrals in, but the bigger problem is, the onboarding of actual practitioners. There are quite some shortages, in that space and sector, making it hard for growth. So 6 million there, and all the other smaller departments combined do 440 in hours a week, and circa 1.5 mil there. So that's the breakdown, and I'll hand it over to Zoran. He'll continue with the presentation. Thanks, Lachlan.
Excellent. Excellent.
Thank you very much, Walid. Yeah, thank you everybody for turning up. As was previously mentioned, yes, Freedom is a profitable organisation. We make both profit in on an accounting sense, and also on our 4 Cs in our revenue cash flow generation that we do on a quarterly basis. So as you can see, over the last 3 quarters, the next quarter is finishing today. Well, this Sunday it's finishing. So next month we'll actually produce another 4C to distribute to the market. But at the moment, as you can see, we're producing quite healthy cash flows on a quarterly basis to be able to contribute to the market. Now, what we anticipate is that this trend to continue to grow in the future. So one of the, as you can see from the prior presentation that Walid and Jamal have already mentioned, is that we're growing on a monthly basis. We're growing through organic growth out into different markets, to which what we see is an ability for us to actually continue this progression over the next period. There were some temporary minor factors for abnormal items that you'd anticipate in a listing phase, which is the reason for the abnormal items. But we don't anticipate them to actually continue on in the future, because once we've listed, that's it. Now, one of the things that, well, let me just go to the next slide. As Walid said, is we are in different locations. We are in Sydney, New South Wales, in Victoria, and in Adelaide at the moment. So for us, our footprint, we want to grow our footprint to be national. Now, as advised during the IPO and over the past announcements, we want to become a national provider of NDIS services. So the way that we can actually do this is through both organic growth, is what we're achieving, and also via acquisitions. So that's our mandate, and that's what we're looking to actually do over the coming months and coming years as well. So as Jamal said, we have a stretch target for ourselves, and that's what we're looking to actually achieve.
Absolutely.
And then each of those, as we grow, that will then add into our profitability, add into our cash flow forecasts, which will add into additional cash, which will enable us to actually grow continually. So as touched upon by both Jamal and Walid, the NDIS budget has been a factor for that is in the market, in the media at the moment. Now, the growth of participants from 650,000 to over 1.1 million it's there. It's something that's actually going to occur. Now, the NDIS is a necessity in Australia. It is there to support the disabled and those who cannot, that need assistance, and we're here to provide those services to those participants. So for us, look, the growth, if the market doesn't grow and the government actually halts any growth within the NDIS funding, it will still we actually believe that we will still grow the organisation and grow Freedom through our organic growth and through our acquisitions. So any additional growth through the NDIS funds that come through, it will just accelerate our trajectory. So because the NDIS is growing, we're not going to be constrained by what the government does for our growth. We're going to grow organically through our quality of support, our systems that we've actually implemented, and our referral network that comes to us. So as current providers started, so one of the other factors that we actually welcome the government to do is to implement a stringent regulatory framework that they want to introduce, which should actually provide vital support for the providers and also to weed out any people that actually are not adequate providers within this space. So as providers leave because of regulatory framework that's actually being put in place by the government, which will mean that there are additional participants that actually need support, which should then actually enable us to actually continually grow our business. So yeah, so they're the main parts of the budget. We believe that the government, either party, will need to support NDIS because it's there to support the disabled and those who need assistance at the end of the day.
Absolutely, absolutely.
Now, Lachlan, I've just got a couple more slides to go through, but I can see that we've ran a little bit over time with the presentation. Are you?
No, that's okay. I'm happy to go very much over time for members and guests. So, because I think it's worthwhile going through with your presentation to hear everything you have to say. What I will say up front is as just a question that popped up, and I got to admit, as an advisor, I'm definitely thinking the same sort of thing. Is organic growth is great, but it looks like you're going to go through it with this presentation, this slide as well. But what is more or less your targeted scope of acquiring at the moment? Is there a certain sector or a certain area that you're looking to acquire to grow the business further? It sounds like obviously having that full-time care in the household for that participant is the most profitable. But is that where you want to acquire more? What's the scope with regards to that?
Yeah, and that's a brilliant question. And if we can just hold on just for 2 minutes to answer that question.
Absolutely.
It's actually coming up on the next slide.
Even better. Okay.
Yes. So like Zoran and Walid have mentioned before, we do have a strategic growth plan, and it's for the next 3 years. For June 2027, our strategic growth plan includes expanding into every state and territory so that we become a national brand. In that Freedom Care Group is an NDIS provider all over Australia. We want to triple our revenue. We want to diversify our income streams. We want to maintain a 15% EBITDA. As you grow, that can eat into your EBITDA, but we are aware that we need to produce a profit margin that's sustainable for the long run, so that as we do expand and we do eat into our profit margin, we do recognize that we need to, take a long breath, count, just reevaluate where we are and maintain that 15% profit margin. And by continually educating and updating the market on our achievements, we strive to achieve a better PE ratio. The slide actually says PE ratio. Everybody's got one, but we want a higher PE ratio from where we are at the moment. And that's what's going to drive shareholder value in the long term. And if we go to the next slide, yes, organic growth is important to us. Organic growth is a really good way to grow in that it's free growth. It doesn't cost anything to have organic growth. But we're certainly not only relying on organic growth. We have an M&A strategy. And the things that we look for is, number one, we need the target that we're going to merge into Freedom Care Group or acquire into Freedom Care Group. We want that target to have an ethical and a geographical compatibility to FCG. So we need to study the ethics behind the business, make sure that they are compliant, they do apply best practice, and they're not a fraudulent company. We don't want to fall down into that trap. And we want their geography to be compatible to us. We don't want to buy a company that is strong in the western part of Sydney, which is where we are strong in at the moment. The target needs to have a turnover of $3 million or greater. Anything below $3 million, there's just not enough savings through economy of scale to be made. with a company that's turning over less than $3 million. Anything more than $3 million, economies of scale come well into play. We need to have an identifiable scope for organic growth, which means if we acquire a business that does mainly accommodation, that's fantastic. We need to recognize that we can grow on the back of that client base in order to introduce other services that target doesn't provide, which includes further shareholder value and revenue growth. If the target company had fantastic management system and administrative systems in place, they probably wouldn't be up for sale. We usually find that the businesses that are up for sale are where the owners are just sick and tired of the management and the administration, which is very strong and very demanding within NDIS. And I won't say we've mastered it, but we've done a good job, and we strive to do an even better job in order to master that component. So we are looking for targets where they've been doing a good ethical job delivering services to the participants, but they are not coping very well with payroll, with staff, with management, with systems within the company, and that's where we can bring value to that acquisition. We do prefer the founder of the acquisition or merger, that target, to stay involved with us moving forward. If they got to $3 million or $5 million or $10 million in revenue, there was something that founder was doing right, and we want them to stay around if that's possible. That would be a preference for us. I know it's not always possible, but it is a preference. And we want the team to be highly engaged. One of the greatest difficulties in a merger and acquisition is the culture of the staff within the target company, and that can present its own challenges. So we didn't need to study that. If that culture is so far away from us, then it's probably, we don't discount it, but it's probably something that we need to consider.
Absolutely.
So I hope that answers that question, Lachlan.
Absolutely. I will say my probably a question I would ask is, in the near term, obviously you've done a scan of the market. Is there a number of companies that fit into each one of these that you're talking to at the moment or look forward to talking to?
Absolutely. Absolutely. We can't disclose too much, but there is definitely activity there. The marketplace is very fragmented. It's really fragmented. And that is a really good opportunity for Freedom Care Group moving forward. I mean, we've had peers that are struggling with the management and administration within their business that come to us for advice. And we've even offered, to take on some of those back office tasks for a fee.
Yep.
So the market's very fragmented, and it won't be long before the fraud component of NDIS puts more and more pressure on the providers, and that will tend to get some of them to think twice and three times about whether they want to stay or not. And the ones that don't want to stay and do fit most of those criteria that we've set out for our M&A strategy,
yep,
they become targets.
Perfect. Lovely.
And the next couple of slides are our beautiful management group. We don't need to discuss too much. And the slide after that is our beautiful, beautiful members on the board of Freedom Care Group.
Beautiful. Beautiful. Well, gentlemen, that's a fantastic presentation. Members and guests, if you want to send through some questions down the bottom, that'd be absolutely excellent. I'd probably say initially, just from my standpoint, what has been the biggest growth side of participants you've seen coming through? And I know you touched on that the plan of how long those participants have been around can be between 1 year continuous to 5 years. what is the ability to almost secure to 5 years, or make it more secure to have a bit more participants extending their plans out, or is that just done by someone else?
The extension of the plans, once somebody is diagnosed with a disability and they get access to NDIS, they're practically there for the long term. Yep. It's only if their diagnosis change, which the nature of disability is that it won't change. So once somebody gets a plan and they're funded for support services, they're going to get that ongoing. And that's one of the beauties of this sector. You know, you're getting a customer that comes into your business that's likely, you know, there's a 70 to 80% chance that they'll be there year in, year out. Unfortunately, people with a disability have a higher mortality rate. So they do pass away. And that's the biggest reason why participants leave our service. And that's actually because they pass away.
Okay.
I think, Lachlan, on that one as well, just adding in there, it was, 1 to 5 years in terms of what a participant's NDIS plan, that's pretty much what will show on the plan. So if it was a 12-month plan, you'd be expecting in 12 months' time that plan to come back basically refreshed for another year. Why I was saying the government sort of boxing it in a little bit is year on year, you do need to go through reassessments and put reports and all this stuff that does cost money, even though the participants' needs are almost the same as last year, right? So why do we exhaust a whole bunch of funding on just telling us that it's going to be the same? We'll just make it the same for the next 3, if that makes sense. So
exactly right.
There's a bit of money on that front, but yeah, like Jamal was saying, once you're in, you're basically in.
Okay. Is there plans to go broader than just the NDIS? Obviously, that is a main part of the business altogether. Is there clientele base or participants elsewhere?
And that's a really, really, really good question. There is support. You know, we want to stay in support services. NDIS is just one component of support services. There's another component which is quite large, and that is children's services. Now, that's not a federal government funded service. That's a state government service, but every state has it. And that is for children under the age of 18 that don't live with a nuclear family. They need support services to get along and live their life. So a lot of, there is a good solid component where those children actually need to have 24/7 supports in a home environment, just like our accommodation space. It's a very challenging space because it brings another level of governance and compliance because they are children. But it's a huge market with a lot of funding, and we do have plans to move into that. And another one, Lachlan, is what's called lifetime care. There are people that get permanently injured in car accidents that go into support services where the funding comes from insurance company rather than NDIS.
Wow. Okay.
The skill set to look after them is the same. The avenue to apply to be accepted as a provider for that is different. And we do have plans to get around to that and into that space as well.
Okay, so that's a further growth area and market that you're looking to get into. Okay.
Correct. And it diversifies our income streams as well.
And so as for, let's say, competition, or obviously competition for the NDIS is more acquisition targets for you at the moment, but what is your ability to get those referrals more often than not? Is there a scope where you're just made in the right networks, or how is it working that way?
It's once again another brilliant question. I don't know who's asking these questions, but they're absolutely brilliant. If NDIS was only about home and community participation, which is where we sent support workers into a participant home to do a 2, 3, or 4 hour shift, for example, clean the home, clean the bathroom, help them it with self-care, help them with hygiene, help them with their meals, take them to a doctor's appointment, etc. That is very low-skilled work. All the providers can do that, highly competitive. It's actually ugly work, and we don't enjoy it quite as much. The accommodation space and the allied health space needs clinical expertise to excel into that space. Right. So when you have someone without clinical expertise going into that space, they stick out like a sore thumb. But when you get somebody like Walid's quality that heads accommodation and engages with stakeholders and potential referrers, and they get to see the quality of the supports that his department provides, it opens the door to referrals like there's no tomorrow.
Absolutely. Absolutely. Well, we've only just got a few more questions, and then we might leave with a final comment from you gentlemen. But there's a lot of what I'm just trying to get an understanding of is the process, more or less, of a participant coming on and what the cost structure is for you guys. And I think this could be a question for Zoran in particular. From the cost sort of side of things, from a participant coming on board and they're staying with you, what is that looking like at the moment as a expenditure?
I think Walid
might be the better person to ask.
Sorry.
As the chairman, I'm not involved in the Walid's the better person here.
Appreciate it. Look, like I said, honestly, most of it is quite low capital intensive. You won't need too much. Like, for instance, I'll give you an example. If we get an allied health therapist that comes on board, you know, you're going to be paying in wages, or they might be on board as a contractor, or whatever the case may be. They won't really have much of a back end other than processing payroll or an invoice or two. So it's quite low capital intensive. The most capital intensive part of our business is the accommodation space, and it happens to be the biggest space. So, you know, just as sort of ballpark figures, setting up a home and getting something running off the ground, you know, over a year, for instance, would probably cost us 50 to 60K to have that, you know, have that exercise happen. You know, whether you've got somebody there or don't have anybody there, that's, you know, different things you can talk about. But at the end of the day, we've got a method, and we're working on our systems to obviously grow through this space. Like I said, we pretty much set up our first home in September of 2020. That's the first home. We're upwards of 92. So, you know, we've sort of understood the metrics. There's a lot that goes into how you pair people up, and what matching and whatnot. But the bringing somebody on board, it's not the most capital intensive part. The most capital intensive part would be to put somebody who's funded for this much, but provide this much level of supports, for instance, because that's what you need to do there. That could cost you $4,000 or $5,000 a week of ongoing cash flow if you haven't done that right. So, you know, bringing people on, bringing the leads, you know, leads don't really cost us anything at the moment. It's organic. There's a little bit of marketing there, but negligible. The back end office is really where our cost structure sits. And the way, if you have a look at a lot of our financials that have been released, we try and segregate the, you know, management costs from the actual support delivery costs, as well as the accommodation costs. So there's sort of our three big groups that we just try to keep sort of separated there, and we've got our own mandates and budgets to keep within those as well. Don't know if it answers it. It's a hard one to answer because we can deliver 1 hour worth of supports, and that's the only thing we do, or we can have somebody with us 24/7 all day, every day.
Absolutely. Well, I think, gentlemen, we might wrap up with a few comments. Jamal, your message to current shareholders and would-be shareholders is what at the moment?
We are not a mining company where we are going to drill and find something in our tenement and our share price is going to go 2, 3, 4, 5 times overnight. We are definitely not that. But for the long term, we've got an amazing future ahead of us. We've got a business landscape. I've been in business for 38 years. I've never seen a business landscape as green as this space is. We've got a very bright future ahead of us. The growth rate is amazing, And if somebody wants to invest for a longer term return on their investment, it's a great place to be.
Love to hear it. Love to hear it. Well, that will wrap it up for us at Sharewise, and obviously for Freedom Care Group. Gentlemen, thank you so much for taking your afternoon out to have a chat with us in the audience today. The recording will be online, so if anyone is just entering late, you can always watch it on YouTube. But apart from that, we'll most likely see you in the next one. Thank you very much for your time.
Thank you, Lachlan.
Thank you.
Thank you, Sharewise.